Okay, guys. It was quite a week, to say the least, and there has been a lot of good events taking place during the week. A good market moving events. Uh, we had also the FOMC. We had the meetings. I think the ECB meeting and the Draghi's press conference that he did right after the ECB cut the interest rate. So there has been a lot of political events that took place that affected the currency market, and we need to weigh these events so that we can see how they are going to affect the next week. So just to summarize the events that took place last week, first of all, we had the FOMC, and basically they stated that the economic situation is slightly getting better. There was no real change between the communique that they issued in March and the communique that they issued in issue that they communicated in the month before, except that they stated that they will be standing ready to actually ease rather than they will be standing ready to ease more than they are going to do any, the word ease, if you will, came first in the communique rather than saying that they would raise interest rate or they would. The amount of monetary base or the value of the monetary base that the Fed has injected into the market so far, according to the Philadelphia Fed, is about $3.5 trillion so far, and they're moving very swiftly on the base of doing 80 to 100 billion of injections every month, by either by buying treasury or by other means. The one thing that came out on the US economy is that the unemployment, yes, it's getting better, but the average number of hours worked by employees are getting less. People are young, small investors or small business people are not hiring more, or they're keeping the number of employees under the number of 50, because there seems to be something I don't understand what it is really, but it seems that if they go beyond the number of 50 employees, that would mean something would change with regards to their health insurance plan, but I'll have to do some more research on that. The other thing is that there's weakness in the government expenditures right now. This has been the lowest government spending that is done on a month-to-month basis since the Korean War. So that is also should be having some sort of an impact on the US economy, or a slightly negative impact on the US economy. The consumer spending has lessened. The amount of money that the Americans are putting on their credit card it has been declining, and it's actually coming in line as if, it seems that, let's say the Americans now are not going, just maximizing the expenditure on their credit cards. Having done that, or that being done, this, of course, the United States is a big consumer market, and one of the big ways to fund that consumption has always been the credit card. So that might have some impact on the consumption. That's with regard to the US dollar, or the US economy. With regards to the euro, as I said, the ECB has cut down the interest rate by 25 basis points. It also cut down the bond rate, if you will, from 1.5 basis point to 1, and it cut that down by 50 basis point. But what's more interesting when it comes to the ECB is the news report that Draghi have done right after the meeting. Now, cutting the 25 basis point on the interest rate, this was pretty much expected. A lot of people were thinking about it, about the possibility of that. It is, it was in the back of a lot of people. There has been a lot of expectation that he would do that. And there was some back and forth going on whether he will be able to do it, to convince the Germans that lowering the interest rate or easing more, giving more ease to the would be beneficial or not. But him being able to cut the interest rate means that he was able to get the Germans on his side. But what was much more remarkable, and the term remarkable is the word here because it has been, I think it is the most important thing that came out of the ECB meeting last week. And I was sharing this with the guys in the room on Friday. The most profound, or Thursday, the most profound thing that came out of the meeting is that he stood, and when asked the question, will he allow for negative interest rate? And the term negative interest rate means that for a bank to place deposits with the ECB, if you will, the ECB used to pay them up to now 75 basis point. They cut that down to 50 basis point. But taking it to a negative rate, interest rate, means that basically he's going to charge these banks for depositing money with them, with the ECB. And the idea of that is that he has been complaining about the banks getting the liquidity that the ECB has been injecting into the economy. And rather than the ECB taking this money, or the banks taking the money from the European Central Bank and doing what they are supposed to do as a bank, because the primary business of a bank is to lend money, instead of doing their primary business, they are now taking this money and either playing with it, or it's not playing, but putting it in a secure environment, which is the bond. So they take it by the right hand from the ECB and they give it to the left hand to the ECB, and in the same time they're just getting one interest rate, one point interest rate. So they're taking it by the right from the European Central Bank, turning around, giving it back to the central bank by the left hand, and the money is not going into the system. It's not helping the people, and the ECB is being handicapped by the bank's action. And for him to stand up and say that he's going to do that, he did not mince words, he did not use diplomacy. He said, yes, we're ready to do that if and when that is necessary. And that is, as I said, profound, because that means Germany is pretty much on board. And this is the key or the one that has been putting the reins, if you will, on the ECB and putting the obstacles in the face of Greece and in the face of also in the euro. Spain's situation, the unemployment situation, is extremely bad. It has risen to about 27%. There's about 6 million Spaniards out of business. Barcelona, which is the Catalan zone, it's the most prosperous zone or territory or whatever you want to call it, county in Spain. They are talking about seceding or getting out of Spain because they fear that all this depression is going to come towards them. Spain, the number of having 27% of your population unemployed, which is close to 6 million, that is a depression. This is a country that is in a depression right now, and it is in a lot of financial trouble. The same thing with Italy, but on the good point in Italy, I'm not singing doom and gloom, I'm just giving you a summary of what has happened, because this is the kind of information we need to decide what kind of news is happening and how the market is dealing. I'm just giving you a brief summary of what is out there. I do not sing doom and gloom. Greece, let's take Cyprus first. Cyprus the parliament have passed its approval for the Trojka, whatever they call it, rules that they set on them, and this finally the haircut has been approved by the Cypriot parliament, so now it has become the law of the land. With regards to Greece, they are still talking about trying to work on the austerity. They're having, most of the Europeans now are against austerity. Even the French Minister of Finance, on his way to Germany yesterday, has declared that now is the time that austerity has ended and there are new measures that needs to take place. So there is a lot of turmoil that is taking place in the European zone, to say the least. But most important underline is what Sarkozy, who is the previous French president, said in Montreal yesterday. He was asked about what's happening in France, and he said, well, what about his life after losing the election? He said, well, there is a life after politics, and basically he is happy, and he's actually more happy that he's out of power, seeing what happens to the people that came to power after him. And in a very undiplomatic way, he did not name or call President Hollandaise by his name. It's just the people that came after me. And when asked about the euro, he made the remark which I haven't heard for a very long time. He said that this situation with the euro needs to be protected at all costs. because if the euro disintegrates, war, and that's the word, war, W-A-R, can happen in Europe, or wars can get started back again in Europe. I guess I don't know, I cannot argue with the guy, he was the president, but it was a remark that grabbed my attention. So that's it. On the final note, Australia is having a lot of hardship right now with what's happening in China, the slowdown in China, and today there is a Royal Bank of Australia meeting, and there has been rumors, or there is a possibility that the RBA might actually cut down or slice its interest rate. It is the highest paid, or the highest interest paying currency right now, so they are suffering, and anyway there is a chance that they cut interest rate. Having said that, so let's go now. We know that there is a lot of turmoil in Europe. There is a lot of talks coming up of negative stuff in Europe. We know that there is a possibility of an interest rate cut in Australia. The United States is kind of stable, and of course Canada is stable. But these are the events, the background events that has been happening in the last week. So with that, we take a look at the dollar. As I said, the unemployment is good, the numbers are good, the confidence is good. So, and technically the chart is good. We're above the 81, 89. We still haven't broken above the major structure, which is the 84. So with all that said, and with the economic background of all the events that happening last week, the dollar and the reversal that we had would indicate the strength of the dollar, and it should continue. If you look on a weekly chart, you can see that this now has become a buy signal, because we have traded below the 81, 89. Now we turn back, and today we are trading at 82.39. Even though today is a holiday and it's been a long weekend, so that is, I haven't discussed the plan, I'll do it later, but this again is considered a good buy signal for the US dollar. The next one we're going to look at, which is, I haven't discussed, but I'm going to bring it up, which is the Japanese yen. Now, the Japanese yen, as you can see, I forgot to mention that. This noise is driving me nuts, to be honest with you. It's a holiday here, and it's a big holiday, Easter, so everybody's making noises the way to celebrate here. Anyway, what Draghi has said about doing everything that he's going to do and taking it to the point that he's going to allow negative interest rate, what that means is he has given a green light to the Japanese Bank of Japan to do whatever they want, because he stated he's going to do whatever they want, so he's going to allow basically he gave them his blessings, or giving him the statement that he's not going to do anything. He gave them his blessings for them to do whatever they want, that's in short. So with that, you can see that on Friday, after the announcement, we had a turnaround in the Japanese yen, and we started pushing down. And most of us, with the guys that were trading with me in the room, we really caught some magnificent moves in the yen, and you will see them when we go to the spot. So we had very big moves: the dollar yen, the pound yen, the euro yen. All the yen pairs flew, simply because the so-called blessing came into play. So again, we're looking for this to continue as it did. So we did the dollar, and now for the euro, these are definitely bad news or negative announcements that has come up, and as of yet, the euro is putting one inside day after the other. This is the daily chart. If you put the weekly chart, it is still, we're still above, according to the indices, above the 130.20, if you will. So it's weak today. We don't know this is the weakness. Is it because Monday, today was a bank holiday in Europe, or what? But again, we don't really have a real upward momentum, nor do we have a downward momentum. But being above the 130.20, still above the structure, having one inside day in another, we can say that now we're having bad news and we do have good action. So that is slightly positive for the euro. I wouldn't actually be going to sell the euro quickly or be singing the doom and the gloom unless it trades below the structure point. Okay? The next one we're going to look at, which is important now, which is the Australian. As you can see, the Aussie is slightly weak. It has been technically right now below the structure points for a while. This is a big major, what we call a turtle soup trade. It has put down here a lower high, but this now has been the new structure, and for the last several sessions it has been moving kind of sideways, and again I believe it's in anticipation for the interest rate cut. Khalid has sent me an article the other day about the possibility of what Australia calls a currency war, and there is a very good chance, I believe that there is a very good chance that the Australians would cut the interest rates. There is no point for this currency to be that strong in a world where all the other currencies are moving into the opposite direction. It just will definitely have a negative impact. If you look at the British pound, just because we didn't do the British pound, but if you look at the British pound, I mean, this currency, it is pretty much near the lower third of the tier of the price. If you look at the US dollar, it is also pretty much at the bottom of the downtrend. As you can see, it is pretty, there is no economic reason that would benefit Australia if its currency chart looks like this. It just doesn't seem to be any economic reason for it to do that. So there does seem to be a good argument that they should be doing something towards easing or lowering the value of the currency by cutting the interest rate. So there is a good chance that it will do that. So we will be slightly negative on the Australian dollar, even though we will wait for the short, but we are going to be negative on the Aussie dollar. With regards to the British pound, British pound, we're still in a big range. I mean, it hasn't really. It did break here. I mean, this was a kind of head fake for us. I mean, that was a structural point here. It broke through. It came back above it. As of now, we are going to be, because we trade what we see, it's above the structure point. It broke in below the structure. Now it's back above the structure. So the only thing we can do is look at buying it upon strength. We're going to be looking to buy strength in the pound, and primarily we may focus on the pound yen. The next one is going to be the CAD. The CAD is also, it does move in tandem with the US dollar. It is above the 98.94. It is 99.17. So again, we trade, we see, and in that stance we will be looking also to be buying the Canadian. You can see several times now it's above that structure. So the bear market, which I was telling you that as long as it's below the 98.94, we would be in a bear market. Going above the 98.94, that bear market ceased to, or it's ending right now. And as of this moment, the only choice we have to do with the Canadian is to buy it. And last but not least is the New Zealand dollar. And that pretty much mimics the Aussie. And if the Australian are going to cut the interest rate, and there will be weakness in the Australian dollar, then probably we will get the New Zealand either will follow suit in the form of weakness, and so we're going to be neutral, if you will, on the New Zealand with a negative bias. So with that, let's summarize what we have. I just had to give you the events so that you can have a picture in our mind what is going on before we decide. So with that, we're going to stay with the dollar on the long side. We are going to be negative to slightly neutral on the euro, and as well and the Swiss, they're pretty much one and the same. With regards to the Australian, that is going to change. We are going to be negative, well, it's actually still negative, yeah, that's right, negative to one second, guys. Because of the Aussie, we are going to be slightly bearish, and the same thing with the New Zealand. The Canadian now, we're going to look at it in a slightly positive way, so that we're going to be positive on the Canadian. The yen, of course, remains the same as weak as it is. Just trying to organize them. Canadian is also going to be positive on the Canadian. With regards to the New Zealand, we are going to be negative on the New Zealand. I'm sorry. We're going to do the same thing as the Australian. And for the pound, we are going to be, we're no longer going to be negative the pound. As long as it's above the structure point, we're going to be positive on the pound. Just looking at the so with this, what we're going to be doing is we'll be looking at buying the dollar and selling the yen. We're going to be buying the CAD and selling the yen. We're also going to be looking at buying the pound and selling the yen. The euro is going to be the next candidate with the yen, same as the Swiss, because they move in tandem. With regards to the Aussie and the New Zealand yen, it all depends on the outcome of today. If there is a cut, we're probably going to get a knee-jerk reaction to the downside in the Aussie yen. So we're going to be patient with the Aussie yen and the New Zealand yen, or we can, let's say we can start with the New Zealand yen, but with the Aussie yen, we're probably going to get this knee-jerk reaction. We can also start looking at going short the Aussie dollar. We can also look at the Aussie CAD. We can also look at the Euro Aussie. And we can also look at the Pound Aussie. And also the same thing with the New Zealand pairs. So we can be looking at the Euro New Zealand, the Pound New Zealand, the CAD New Zealand, all of those based upon pretty much on the results of what happens out of today's meeting in the World Bank of Australia. Okay? So with that, we are going to wrap it up. If anybody has any questions, I've been talking for straight